All
Hey,
right.
oh,
Hey.
look at who bobbing their head today. All right.
I always bob my head.
Okay, you getting into the music. Okay.
Yeah.
Oh, you know what? I didn't ask you. What day is today?
Water Cooler Wednesday.
It's Water Cooler Wednesday already?
Already. Yes. So we
Awesome. So that
mhm.
means we have to bring the cool, refreshing real estate water today then. That's what we doing.
Yeah, yeah. That's where we at. Right. We're gonna bring we actually gonna bring the hot tea. Right.
The hot tea today. Okay.
You're right, the hot tea. So everybody wanna know about what's their credit score supposed to be. So
Oh yeah, credit is always a hot topic. That's always hot. That's that
yeah,
sizzle hot. That's
yeah,
that real hot stuff.
yeah. That's like, well, I don't know what my credit score is supposed to be at. I'm like, okay. So, so
Or some people are probably trying to figure out what they have an idea of what credit scores are, but what's the most important?
yeah, like
Yeah.
how do I get it where I need it to be in order for me to buy and qualify for like assistance? So that's definitely what people are looking for.
Oh,
So
you
uh,
getting savvy over here now, I see.
right. You look at you were kind of lagging a little bit. So hopefully
Okay.
we'll be okay this episode.
All right.
Um and we'll be able to get this done. So, my name's Dione Branch, and I am with EXP Realty. And my team is called
Mhm.
Allure Dream Homes. And we like to hold your hand throughout the home buying process to make things easy for you. So, all
And
right.
of course, I'm co-hosting today. It's Lisa from Next to Lending. We had a name change recently. I have to always think about that now when I say it. But
Well,
we are
go
here for
ahead.
all of your real estate needs, whether it be residential, commercial, primary occupancy, like you buying a house to live in, or if you want to invest in real estate, we do that too.
All right, all right. Well, Lisa, I don't know if you co-hosting or really hosting. You got all the info that everybody needs to know about. So let's see. Right?
Well, let's maybe just do some questions and then kind of figure out where we'll go from there.
Yeah,
So,
yeah.
so what are people trying to figure out?
Well, they want to know like, what's the score? What's the magic score in order to get where to be able to purchase a home, right? Like,
Okay.
looking for what's that magic number?
So the thing about that is I think you've probably learned this over the years of working with me. There's never really a one way to answer a question when it comes to mortgages. There's not a magic number per se. Unless you want to have 800, and if everybody's just expiring, and to have an 800 credit score, we wouldn't have any problems. Y'all 700, 800, we're good.
Right. If you
Well,
have 700, then you don't even need to get to the 800. So,
yeah, so it's not, I wouldn't really say it's a magic number. However, there are some numbers to definitely keep in mind. Like, for example, depending on what type of financing, there's going to be numbers that are specific to the type of financing that you're looking for. So let's just start with a lot of people seem to know about conventional and FHA, or conventional versus government. So conventional would be a loan that's not a government backed loan. It's not guaranteed like how a VA loan is, and it's not insured like an FHA loan is. So a conventional loan would be something where you needed to have usually right around a 620. That's usually the minimum score. Now, I do have to mm, break up that what I just said because of the fact that just a few months ago, I believe in end of November, they made some changes and they actually said that they don't have to look at a minimum score for conventional.
Right.
Now, to be real honest, we haven't seen that come into play yet because even though they said that you don't need a minimum credit score, a lot of the lenders aren't going for it. So the
Yeah.
agency, Fannie Mae, Freddie Mac is saying you don't need to have a 620, you don't need to have a minimum score that's specific. But lenders, they're the ones with the actual money. The investors are saying, no, we need you to have a 620
Right.
minimum score.
They didn't want to be the bad guys anymore, so they put it on the lenders. That's really what it's about. But that's the same as when they say, come on, 0% financing and you can get a brand new car. And you
Right.
get there and you're like, well, your financing is gonna be 8%. And you're like,
Or 18%.
I didn't want to go that high because those cars they would give you up to 20 something percent, right?
Right?
Right.
Yes.
But
Yes.
yes, but then you like, but I came here for the 0%. What happened?
Right. What happened to the 0% interest rate? I thought that's what you all were doing.
You are
Exactly. Yeah,
right.
but that's how it goes. So for right now with conventional, even though technically on the books they aren't saying that they require a minimum credit score, it would still be better if you plan to have at least a 620 if you want to get conventional financing. That's the best thing
Mhm.
to do. And then the other thing would be if you go on FHA, FHA has a different parameters. So they're Dion never like it when I say this. You see that
Right.
look? Okay, but the minimum credit score for FHA would actually be 580. You only have to have a 580, and you can still put only 3.5% now. Now, I do have to say this as well, not because I want you to keep your credit where it is, but just so you understand that if you're in a pickle, that there are options. So I can actually go below a 580 on FHA, but then you'd have to put 10% down. So most people don't really want to do that. But for some
Right.
people, it's the option. And actually, I just closed a loan like that last month. We just did a loan like that last month. She was below 580, put 10% down, and we closed her in January. And they're now
Mhm.
in their new home.
Yeah. So what she had was money, right?
She did. She did.
Yes. So that's the thing. Although, yes, you can go below a 580 and get approved. The issue though starts to go into how much money do you have, because like Lisa said, she needs 10% down. She might even need more than that down. And
Right.
so, and you don't qualify for any of the down payment assistance programs at all.
Correct. Yeah, because usually the down payment assistance programs are going to be where they do have to have a minimum credit score. And they're actually a little bit more stringent. I have seen some down payment assistance programs where they're as low as a 620 on the middle score, but
Mhm.
most of them want you to be around 640, 660 in order for you to qualify for down payment assistance. So that is something good to keep in mind as well. So
Yeah.
those are some of your scores. Now, let's just look in general. In general, let's just think about how credit scores work and what they're going to look like. Most people will call me up and they say, hey, well, my credit score is a 650. Well, guess what? That's only one score. And as
Hmm.
a lender, I look at all three. And
Right.
when I look at all three, I actually take the one that's in the middle. So if you're telling me that you have a 650 and then we go and we actually get ready to pre-approve you and turns out that 650 is your lowest score, well, that's really not your score now. Whatever the middle score is, that's going to be the score that I use to drive the transaction. So, for example, if you have a 600, a 610, and a 620, I'm going to take the 610. And that's the one that I'm going to use to drive your transaction and base all my credit decisions off of that number. So
Hmm.
sometimes people think, oh, okay, well, not Credit Karma. What's the other one? I think it's Experian. One of them, they only give you one score. And so then you go and you look up that score and you think, oh, okay, I'm good. But the other two scores actually might be bringing you down. For example, I had somebody, trying to think of her name, Dion. I don't want to mention her anyway on the live
Right.
because I, just for privacy. But we have a customer, because she actually just reached out to me today. I didn't get a chance to talk to you about it yet, but she reached out today and she was like, "Oh no, I looked at my score and I have a 640." I said, "Well, the reason why I told you to use Credit Karma is because Credit Karma will give you two scores as opposed to just one. You're
Mm,
telling me you have a 640 on this particular credit bureau, but I would be more comfortable to know at least what's one of the other scores because that score might be lower. And then now we got to figure out where you really are." Well, it turns out she went ahead and got the Credit Karma, and her two scores actually are 640 and 597.
oh my goodness.
So that's a big difference.
Yeah.
But if she had just stuck with that one bureau and only looked at one, it wouldn't have given her the full picture. So,
Hmm.
as and well, I'll talk about that in a second. But as a mortgage loan originator, I look at all three credit scores. So you do need to keep that in mind. The
I
other
want to
thing to keep
bring
in,
up
go ahead.
something
Hmm.
else, which is on that same topic a little bit, because
Hmm.
a lot of times we might have a couple, right? And
Yeah.
so one of the couples has a 780, and the other one has a 580.
Oh, that's a big difference.
Right. So what happens? What score would you use for them?
Okay. So a lot of people are probably not going to really like this answer. So one, it does depend on financing because financing can have an impact on how we evaluate your credit scores. For all the government, it's going to be pretty consistent. It will be, we take the middle score, and if there's multiple people on the loan, then we take the lowest middle score of all the people on the loan. If it's three people, two people, five people, it doesn't matter. We take the lowest middle score of whoever's on the loan. So
Yeah.
in that case, like what you just talked about, if that's an FHA loan or some type of government loan, then we would be looking at taking the lower score. So you said the one was 580 and one was
Hmm.
780.
Yeah.
580 is going to be the one that drives the transaction. So yeah, that's usually where it's going to go for government. Now, on the other hand, over the past few years, they have come up with some different ways that they look at scores. So we can do blended scores. Like I know some of the conventional products, we can look at taking the two middle scores and averaging them. And so then that gives you what they call a blended score. And then the AUS findings will calculate that in according to the two different scores. So that is something that could, kind of give you a little bit of boost if you have that great of a disparity, because that's a big
Mhm. Yeah,
difference.
it's a big difference. So a lot of
Yeah.
times, especially with the couples, they're like, "Oh, we want to both be on the loan," but then they're not, one
They're not
man is
both ready.
right, right,
I
yeah,
know you ain't
one
got to
man
say it.
is,
I'll just say it. They ain't both ready. One of them
yeah,
ready. The other one might not be ready.
the other one's not.
So,
Right. So then what happens is if they want to take advantage of the programs and have the lower interest rate, that means
mhm.
that they have to only go with one income. They can't actually go with both, right, Lisa?
Yeah, true.
Mm, yeah.
Yep.
So then that affects your buying power as well.
It does, yep. So you gotta pick your poison. I mean, because you're either gonna pay for it by getting your credit together, or you're gonna pay for it by having a higher interest rate because you didn't get your credit together. So, but you pay either way. You're
Hmm.
gonna pay somehow. So you just have to figure out, like I said, I guess pick your poison and determine which way you think is gonna be the best for you to go. So another thing I wanted to hit on before we move to the next topic would be that when we look at credit scores, a lot of times people think of what they see as being, that's gospel, so to speak, right? So they say, oh, a Credit Karma says I have a 660, I'm good. Well, a Credit Karma score is what we call a consumer report. And so the way they calculate scores for a consumer report is a little bit different than the way we calculate them as lenders. So we do use different scoring models. There are, from my understanding, a couple of hundred different scoring models that are used, and they're used to score some of everything. They could be used to score, for a mortgage loan. They could be used to score for an automobile to finance that. They could be used to score for your rent if you're going to be renting someplace. They could be used as a score for just a regular consumer report where you do something like um, employment. So I haven't done this in so long because I've been working for myself for such a long time, but I used to, they would have you do like a background check and stuff like that. And then they actually would order a consumer report. And then that consumer report actually had a score tied to it. Even insurance. When you go and you apply for insurance, either life insurance or automobile insurance, I don't know if they do this for health insurance or not, but I know for sure they do it for life insurance. They rate you. You know how they say you're rated? So they
Mm-hmm.
rate you. And when they rate you, they're rating you based upon that consumer report. So if the consumer report is showing that you have, a less desirable score, then what will happen is that will have an impact on your rates, and have an
Yeah,
impact on how
yeah,
much you pay in premium and things like that. So
yeah. Because that's what something that I didn't know that they were doing it for insurance, but I have recently discovered that that was also concern. So while you're purchasing a house, your credit is affecting you with with your interest rate of the house. But then you also have to think about it. So because you have to get insurance on that house, and so that could affect you as well in another way. So then when you're saying, why is my monthly so high, right? Why is my
uh-huh.
monthly payment so high? And those are things that factor in order to make that makes your monthly payment higher.
Yes, it is. Yep, because you
Mhm.
have to have homeowners insurance, and the government is not going to let you get away without paying them property taxes.
Right.
So both of those would be part of your monthly mortgage payment. Absolutely.
Yeah. Yeah.
But
So
the
Lisa.
moral of the story on this part is really just that people understand, that it's a difference in the score. Oh, so I did want to give an example. Let me do that real quick. So when you look at a score, like I said, if you see a score on, say, Credit Karma or something like that, if it says you're 640, then that probably really means for me, you're more like around a 625. Because what I've noticed is typically about a maybe 15-ish point difference between their score and my score as a lender. So
Yeah.
it will be different. So don't freak out when you pull Credit Karma. They say you 700. I'm like, well, really, it's 685. Like, what?
Mhm. Well, I always tell people to use Credit Karma to kind of monitor your credit.
Yeah,
But it's not your actual credit score.
right.
And but when you really need your actual credit score, then you could go to places like
Yeah,
myfico.com
that's a good
or
one.
or you could go to Experian and do the free trial, and they'll give you a copy of your credit report. And I believe they'll give you all three scores. I'm not sure, but yeah.
Uh
So
oh, Dion, stop. Oh wait, I
I'm here.
stopped.
Yeah, you're there.
Okay,
I can see you. Yeah.
okay.
Yeah. All right. So Lisa, what do you do if your score, if you don't have a score? It's like frozen or something like that.
Well, if it's frozen, we should be able to just thaw it out.
Yeah.
So you just
Uh,
contact them, let them know that you need to take the security freeze off of your credit, and they should be able to handle that for you. So a
yeah.
freeze, a security hold and things like that, that's not hard. Now, what gets tricky is if you really honestly do not actually have a score. And I can tell you how that happens sometimes. People maybe, I've seen people make this mistake over and over and over again. They say, okay, well, I'm gonna get my credit together. And so they go, they take their IRS refund or, whatever they get, they really discipline themselves and buckle down and they pay off all their debt. So like they have credit cards, there's, it's a $0 balance and things like that. They don't have any debt. So now there's actually nothing reporting to the credit bureaus for 6 months. Usually six is around the magic number because once you haven't had any reporting for 6 months, then technically the way the algorithm works, it doesn't have enough information to calculate a score. So that gets to be tricky because then you really literally do not have a score. It's not that it's frozen or security. You do not have a score reporting. So one of the things to remember is that when it comes to credit, you have to keep utilizing. That's why we have utilization ratio on credit scores. You have to keep using it, because if you don't use it, you don't show evidence that you're able to borrow money and pay it back. So that's one
Mm.
thing. Now, if you do, I do have some programs because, I'm special like that. So I actually do have some programs. I'm kidding. I mean, I am special, but the programs like FHA, I'm sure FHA, the government programs, we can still do a no score loan. So that what that really is going to mean is that you don't have to have a score. I can use what they call alternative trade lines. So I can um, look into your history and see other things that you may have paid over the past couple of years, and then use that to give evidence that you can handle a mortgage.
Okay. All right. All right. So,
So it's doable. I've done them a few times before. They're not hard.
so what do we have some fast wins that we can do in order to move the mortgage FICO? Like we got some wins.
So I don't know what you have, but just off the top of my head, I would say watch your utilization.
Yeah.
Because the quickest way for you to be able to move the needle on your score is to have a low utilization. That means a higher credit score. So just remember that they have an inverse relationship. Lower utilization equals a higher credit score.
Okay.
So that's one thing typically works. You got one?
Yeah, I would say pay. Yeah, you can pay all your bills on time, right?
Okay.
So it says pay all the housing installment debts, 12 months, clean matters. So just always making sure that you make your payments on time on a regular
On
basis.
time. On
Um,
time.
Mm, on time. One of the things that tips that I've gotten and shared over time is if you have one credit card that maybe doesn't have a lot on it or nothing on it, you can put something like Netflix. It used to be reasonable. Now they're a little bit more expensive, but you could put like Netflix, something that's $20 a month, charge it, pay it off, charge it, pay it off. So
Yeah.
then with that continuous showing of payment payoff, it
Right.
does help increase your score. So
Yep. Yep. Because you're doing like what we just talked about is you're showing that you can borrow money, pay it back, borrow money, pay it back. That's what
mm,
the credit bureau is looking for.
yeah, yeah.
And also you just mentioned about late payments. That is the most difficult to get past now. It used to be they were a lot more amicable to helping. They want to see people have good credit and stuff like that. I don't know what happened, but somewhere along the way, that changed. So now, if whereas you used to be able to call and say, hey, I know I had a late on just this one time. I've only been late once in the past 3 years. Can you, remove the late from my credit because it's taking my credit down? And they used to be like, okay, yeah, no problem. We can just do it as a one-time courtesy. They don't do that anymore. That's very
Mm,
uncommon now. It's very
mm,
uncommon. And so late, you would be surprised to see how much one late payment will undo all the work that you've been doing on your
right.
credit.
Yeah. So you
Um,
definitely have to make sure stay on time, watch that payment cycle, for
Absolutely.
sure.
Yep.
Mm-hmm.
Absolutely.
All
So
right.
those are actually the ones I would say, because we kind of was thinking like rapid fire, if you will. So, and I think of
Mm-hmm.
not just saying it quick, but also things that you can quickly do. Those things would probably have the most impact as far as your credit score, and also just understanding how it works. A lot of people, for some reason, they don't want to. It's like they're afraid of the credit bureau.
I think your credit score and IRS are kind of equal, right?
Yes,
Like
I would
those
agree.
two are equal. People you like, oh, they just clam up. It's like, oh, just forget it.
Right.
They have a big hold on us. So yeah.
They do.
Mm,
So yeah, but one of the things that's I think is really important to remember is that they can only go by the rules. So You know, when you know what the rules are, you make them work for you. Just make them work
Right,
for you. Keep up with your credit, see what's going on with it. Go ahead and, Credit Karma's free. I know my
yeah,
FICO has a cost, but if you can't do a paid service right now, that's okay. Sign up for Credit Karma. At least you'll know what the contents of your bureau report are. And that
right,
is the most important, because if you know the context, then you can manipulate the score on your own. You just
right.
have to know
And I
what's
think
on your report.
Right, and I think if you look at it often, then the fear it take is goes away because
Yeah.
you know what it
Yep.
is. Now you go back next week. You like just make it a habit of look just as much as you go on Instagram, go on Credit Karma, check out your credit score and make sure everything's okay. So it just kind of removes that fear from you as
Yes.
far as
No, you didn't
oh
say
Lord.
Instagram.
Right. I just say, hey. You go on Instagram all day, every day. Go on Credit
Right.
Karma.
Go on Credit Karma. I'm with you. I'm with
Yeah.
you.
Mhm.
That was
So,
good.
right. If you need some assistance and you want to talk to us about your lending and your credit score, get some ideas of things you could do, you can
Yeah.
actually call Lisa White. That's her phone number. She could give you a call and you all could talk about it. We do have Maurice Holmes as well. He's not here with us, but we always wanted to share with you that Maurice is our credit guide that we send people
Yes.
to him to help with your credit if you need some credit assistance. All right. And if
All
you just
right.
right, and if you just want to give me a call and say I'm ready, I don't have all those credit problems. Or you just want some tips about what you can do because we always make a plan for you, right? So
Yes.
no matter what your credit is, where you are, we make a plan so that if your goal is to start looking for be in the house this summer, give us a call. Give me a call.
Yeah.
We can start. I can start to make sure that you're connected with my team members and we're addressing whatever needs you have. So, all
Absolutely.
right.
Another
Well,
watercolor Wednesday.
thank you. We're glad you came to join us. Bye.
Thanks. Bye, everybody. Bye.